Good evening, everybody. Today was one of those sad, sad days. They finally came and put the cover on the swimming pool. That's the final nail in the coffin that warm weather is gone. All right. I'm going to kind of go into a little bit of refinement about trend analysis. And that refinement is, as the uptrend is going, and we can see this is a good, strong uptrend, good candles. We could see this was a good uptrend until we started seeing doji. Now we're starting whipsaw, not whipsaw, but pull back, up, down. So this is snow in Minnesota. Geez. So this is kind of a refined analysis that you may have started seeing the comments in the morning or the afternoon. You got those blue candles again. I don't know why, Bill, because they're all red and green. So this is why not only analyzing yeah, I'm reading how. Bill, are you more colorblind than I am? Try widening the chart. Let me try this. Is that any better? Gary, you're getting blue. Okay. I don't have the answer. So this is why not only analyzing the trend of the market, meaning we're up above the T line or above the 3T line, still moving in a bullish direction. However, the nature of the market trend starting to change a little bit, indecisive. Not a major factor, but then when you start having pullback and then start taking it back up, and it's still kind of in an indecisive stage, you have another element that you need to keep in the back of your mind, that if this is not decisive trading, even though we're above the T-line, it means there's really not a lot of force, either up or down, just kind of indecision. Now that puts the investor sentiment more in that stage of not really convinced one way or the other. So any negative implication, like we saw this afternoon where it looked like they're still not going to get an incentive package done. And when that became clear, they started selling off the market. Now, was that a decisive sell-off? It looked pretty decisive. However, this is the futures after hours, which are up 133. So right now it doesn't look like they're selling it off with any great resiliency. But maybe the next analysis is even if they're trading it positive, they're drifting slowly. Would you apply stochastics to this point? Well, yeah, you got kind of a slow drift down on your stochastics. So you add that into your analysis, that things rolling over, stochastics rolling over. What can we really say about the bullish trend? It's not very enthusiastic, obviously. What can we say about a bearish trend? Well, right now, we have to assume that if they've closed back below the T-line, what's our probability factor that they're still in a downtrend? Now, tomorrow, if they closed up above the T-line, what would that tell us? Well, at this point, it would tell us they're up above, down below, up above. And what we kind of pointed out in our training session this weekend about the T-line, using the T-line for our analysis for whether it's with the indexes or individual stocks or futures. If it's bobbing up and down, above and below the T-line, I always had gotten in the past, people say, well, how can we analyze what the market is doing if it's, or any trend is doing if it's bobbing up and down? Well, that is the analysis. But if it's bobbing up and down at the T-line, what's it tell you about investor sentiment? There's no strong bullish sentiment. There's no strong bearish sentiment. So what's our analysis? Probably the market is moving sideways. Now, is that relevant for trading? Well, in our case, we've got the advantage that if we know the market's moving sideways, we've got the capabilities to find which stocks are acting the strongest to be bullish and which stocks are showing sell signals or bearish. This might be market conditions if it's waffling in here for a while, which we kind of implied that or mentioned that a week or so ago, that because we're heading into the elections and the polls show one thing, the investor enthusiasm or the voter enthusiasm shows something else, that nobody really knows what this election might do. It might just be moving sideways. But that doesn't deter us from having half long positions and half short positions on. Bearish, left, right, and overbought area for Dow. Wouldn't it incline the probability of going down? Yes. Increase the probability? Yes. So if even right now, as I say, the pre-market futures are showing that the Dow will be up 150 points, but what's the relevancy of that number right now? 0. Because it doesn't matter what the futures are doing until about 10 minutes before the market opens. So if they open this up 160 points and can't get up above the T-line, we still have to assume that at best it's a slow drift, or it might be they're ready to take it back down to the 50. So the assumption, anytime you're below the T-line, now has to be that you're in a downtrend until you see otherwise. So I'm trying to point out that, let's say they do bring the markets up tomorrow where the Dow closes up 240 points, somewhere up here. Well, now you're down below, you're up above, down below, up above. This is the futures. What do we do in that case? Well, we have to analyze that this market's not going anywhere. Now our analysis is things are moving sideways. Real quick, crude oil closed at $41 today. Which direction is it moving? Really nowhere, but what is the underlying analysis that we have even when the market or the price is moving sideways? We can see there's a T-line crunch in progress. That adds to our analysis. Gold, flat as a pancake. So what do you want to buy or sell in the gold sector? Absolutely nothing. If gold's moving sideways, that's a pretty good indication that a lot of these stocks might not have any, what's some of the other ones? Might not have any real direction to them. Okay, so the next major point is that when we buy patterns, our recommendation on MDLA today was based upon the fact that we could see this support right here at the 50/T line with a doji bullish confirmation on Friday. What type of pattern do we have setting up? A J-hook pattern. And what enhances this J-hook pattern analysis? The fact that it's kind of supported right here at the T line and the 50. So we can be much more prepared to be buying this on positive trading, either on positive trading tomorrow after the doji, giving you a doji sandwich, or if you want to be a little bit more conservative, above that level. So we had a bunch of stocks, I say a bunch, we had a good number of J-hook patterns that kind of illustrate why the patterns work much more effectively, not only in anticipating the direction and magnitude, but also the fact that a pattern setup is usually the accumulation of buying or investor sentiment building up. So look what a lot of these J-hook patterns did today when the market was off 400 points. They were still trading higher. Oh, I forget which one we were looking at that had the T-line crunch. Oh, that was crude oil. A T-line crunch is if we know our basic T-line rule, which is you're in an uptrend as long as you stay above the T-line. And notice what the T-line's doing here. They can't close it below the T-line, and the T-line is starting to push up toward these resistance levels, which means if the price stays above it, it's kind of crunching it up through that level. So when you see that T-line crunch where the prices are staying up, look for a breakout to the upside. Okay, a few others here. We recommended this. Now, here is the perfect example of if we were buying on positive trading today, it was because everything was looking like it should be doing what we expect it to be doing, coming out of a J-hook pattern. The fact that it did a bearish engulfing signal, even though it didn't close below the T-line, you would have closed it out. Because why were we, with our first basic question when we get ready to put on a trade, why are we buying this? Hold on, I got to talk to Alexa. Alexa, stop music. So here's the rationale. Oh. Alexa, stop music. Hate it when you have to start yelling at them. Here's the rationale. Why were we buying this one? Because we could have had a bullish engulfing signal, a J-hook pattern, a breakout of this level. Yeah, she's getting a little bit self-centered. And we were buying it because it was breaking out to the upside. Now, should have said please. I should have done that. Now we have a bearish engulfing signal in the overbought area. So what's that telling us about our breakout? It's not there. You close it out. Now, this is why I was demonstrating over the weekend that I wouldn't be I wouldn't be blaming myself that I somehow analyzed this wrong, because we had no idea there'd be something coming out. That's right. That they would be knocking the market down because of another statement or indication that things were not getting done in Washington. But that's not our fault. There's a statistic that if you keep in the back of your mind always, or you put it on your little sticky thing up on the computer screen, that if you just realize that 70% of your trades are probably going to be good trades based upon candlestick signals. And that can make you a lot of money. But it will only make you a lot of money if you realize that 30% of your trades may not work. Not because you analyze something improperly, not because you sit there and say, boy, was I stupid. It's just a fact of life that there's other elements that are going to move a price on you. So I just have to realize that if I bought this on positive trading today and it closed here, I want to close it out because this trade didn't work. Why? Because if that trade's not working, I don't want to sit here for 2, 3, 5, 7 days to see if it will work because it looked like it was going to work. I want to be able to tell myself right away, this trade didn't work. Let's go find something that looks more like this. If you would have held it through the close, would you keep it if it opened higher tomorrow? No. If I opened higher tomorrow, and let's say, for example, I didn't close this out because I happened to be away at the close and didn't see where it was closing. Now I have to come up with my next strategy. If we've got a bearish engulfing signal in the overbought condition, calling it now at a double top, what don't we want to see it do if we're long? We don't want to see it open lower. If it opened lower tomorrow, you close it out. What do we need to see? We need to see it open positive and trade positive. Now there's that, also the attachment to that analysis. If we see it open positive and start trading positive, where do we want to put our stop? At the close, because logic says if they open it positive and turn it around and come back down through the open or the close of today, who's winning? The bears are winning because of that signal right there. So that's those if-then type trade setups using candlestick common sense. That if this is still in an uptrend, it better trade positive. If they trade this lower, it's a failed trade, close it out and move on to something else. Now I say that kind of glibly. I mean glibly in the sense that you can close out a trade that easy without any emotional attachment. Today I can. Now, that learning process you don't have to go through. I went through that because I would hold on to this saying, wait a minute, I saw a good buy signal and it reversed. JJ, I'll get to Hertz also. It reversed. Now my thought process was, I analyzed that this was going to be a good trade, so it needs to go this way. Now I can say, this trade didn't do what I expected it to do, close it out. Is that the guy, when I said glibly? No, that's Jeff Glibly. I'll remind him of that. Okay, so, oh man, I'm only on slide number 2. We're going to be here until the election. Another one where if it opened positive, what did we need to see it do? Break out through this level. It didn't really do anything of great activity. So some people ask, well, you put a buy if it traded above a certain level, which was 630, and it traded above that level. But it wasn't doing it with any great resiliency. I mean, it didn't open up and start trading positive. It was kind of waffling around here for a while. So that would have been one I would have waited more for bullish confirmation or more bullish confirmation. Now, we also recommended going short on Children's Palace. So look what it did today. It came back up to the 50, which everybody and their brother is watching it. One time it was acting as support. Now it's acting as resistance. We had a strong sell signal telling us the T-line was not going to act as, or is still acting as resistance. So what can we do with this one? Well, if we didn't short it today, if the markets open lower tomorrow, and this opens lower tomorrow, what do we got going on? that bearish doji sandwich. Where's our next target? Probably down in this area someplace. So this is what provides us with the information that tells us what patterns, what signals, what direction are we going with a much greater probability. Chewy. Chewy is one of those examples where the pattern is much stronger based upon the pattern setup versus what the market's doing. Why did the patterns work better? Because there's not an instant reversal. It's a buildup of investor sentiment that's creating this pattern. So, proof of the pudding, look what the stock did today. It was off from its highs. It was up here 320 at one time. It was still traded up $1.65. But what was the end result when the market was off 420 points? It was still maintaining this fry pan bottom trajectory, which, again, is telling us we've got the prospects of much greater upside potential because of the pattern. We have much greater visuals of which direction it's going, and we've got the benefit that it's probably going to hold up better if a market reverses on us. Now, if the market starts reversing and heads down for the next few days, meaning 2-3 days, that may start turning things over. So what a pattern does, gives us a little bit more time to watch to see if they're reversing, and gives you a little bit more time of closing out with hopefully at least a profit or not a severe loss. So the J-hook patterns kept showing up. Lake is one of our recommendations. The first J-hook pattern was where it bounced right smack dab off the 50. Now when I say, yes, I am in Chewy. When I say right smack dab off the 50, remember our first element, or one of the first elements of price movement. If they come up through a resistance level, they'll come back and test it to see if it's going to act as support. If it acts as support, what's it tell investors? It tells us, oh, this is acting as support. Now I have more confidence to be buying. We can see exactly what type of signals or patterns are occurring at those levels. FTRA came right smack dab and did a hammer signal off the T-line. I'm sorry, the 50 and the T-line, which told us that it was a hammer signal. It confirmed the next day we could be buying in here. Now, why is that relevant? Because if everybody can see that it's supported at the 50, they're going to be much more inclined to jump in and start buying this. We just happen to be able to buy it faster by seeing visually that that's where the support level was. What was the other one? Was it ALSN? Well, in this case, it was back to the T-line before heading up in a J-hook pattern. AVYA, same scenario. It was up 37 cents today, coming out of this J-hook type pattern, again, on a day where the market's off 420 points. Oh, is this the right one? Yes, but needs a little bit. Oh, so there was our kind of our scoop pattern. Now look what it's done. Now, probably at this point, when it's moved sideways using the T-line as support, I'm getting to the point where I'm saying, all right, we don't know whether it's going up, down, or sideways. So if this doesn't break out tomorrow, let's close it out. I can always put a buy stop right there, that if it comes up through that level, we know we've got wave 1, wave 2, wave 3. But if it does an indecisive trading day tomorrow, what can we, what's our prospects? Don't know if it's going that way, or going that way. We've lost all probability factors that are in our favor. close it out and go find a chart that looks more like this. Our BNTX, again, a fry pan bottom, breakout, J-hook type pattern. How are you playing Chewy? I've got calls on that one. Can't remember how far out, but they were working very well today. Zoom, nothing to do here but stay long. You do have a doji. Wouldn't want to see it trade back below. Let's make this big enough where we can see. Probably would have a sell stop right here, because logic says if it comes down through that level, they're more than likely coming back to test the T-line. Now, Blink was looking good. Had it opened positive and traded positive on the day, that would have told us that we had a bullish flutter kicker after a Morningstar signal. We had all the aspects of a good, strong, bullish trend. But the fact that it did a bearish left-right combo and closed back below the T-line told us that if we owned it, we should be out of it. Number one, because it closed below the T-line. And number two, what's it telling us about the strength of this move? It's never really confirmed the Morningstar signal. It should have opened here and traded here. Told us we were weak. Today, or yesterday, Friday, it opened, did kind of a bullish flutter kicker potential, but failed here. So wouldn't want to be in this one, because what does this chart tell us as far as the direction? Absolutely nothing. Let's go find something better. Bed Bath & Beyond, ever since the breakout, you're in that 45-degree. You don't have to think about this one. You just stay long as it stays in that 45-degree. Goose, another one that's setting up for that potential J-hook pattern. Where would be a best place to be buying this one? Right there. I'd put a buy stop at 36.05. But if it came up through there, what's it telling us? Left-right combo, bullish confirmation. It's pretty much confirming we're still in an uptrend. FedEx held up reasonably well. Now, this is, again, illustrating why you look for these or expected pattern setups. We had a breakout move right here. Then what happened afterwards? There's our 45-degree. We have one basic rule on a 45-degree. You can stay long as it stays above the T-line. Now, that is a little bit more relevant than you may think, because if you've got 10 positions on, the market's waffling around, and you've got a couple of these positions where you know the basic rule is that you can stay long as it stays above the T-line, how long is your analysis of that chart every evening? Approximately 1.5 seconds. If I click on this and say, oh, nothing wrong with FedEx, let's go on to the next one, that's going to give me more time to be analyzing what to do on some of the charts that might have some iffiness to it, that I want to spend more time trying to figure out what to do with those. I don't have to spend a lot of time. All I know is stay long as it stays above the T-line. Let's see. Oops, we did this one. Oh, no, not this one. ENDP. That's a good-looking chart. It was ENPH that I was looking for. That's a good-looking chart. And what do we have on here? Again, our classic fry pan bottom, strong price move. J-hook pattern, looking for the next strong price move. So again, recognizing this classic pattern provides two things for us. It tells us that there's a possibility that a J-hook pattern is setting up, number one. And number two, if it does, what's the magnitude of our next move? The same magnitude as this move right here. What's the prerequisite for a J-hook pattern? A strong price move. What's the expectation coming out of a fry pan bottom? A strong price move. Call it the classic because they usually occur in correlation with each other. And CLSK, if you happen to be short, you just stay short. Because that same basic rule, the T-line rule. Doji, gap down, failure, that told you they weren't taking it up. So right now, how long do you hold on to this? If you've stayed long on this because it stayed below the T-line, you just stay short. Did I say that the right way? You stay short as long as this stays below the T-line. Hertz, we closed out today. Had the calls on this. Why did we close it out? Because our expectation was that if they gapped this up and did a doji, they should be moving in this direction when they opened up positive. The fact that they brought it back down here, whether it was because of weakness in the stock or weakness in the stock because the markets were selling off, doesn't matter. They were making their decisions, and I say they, the market players were making their decisions to come out of this, so it didn't show us the strength we needed to stay in that position. Doesn't mean it's over. Maybe we see a doji and then they start buying it again. We can always come back in. But right now it's telling us the expected strength of this gap up isn't there. Let's get out and see what happens. Okay, the biggies. Netflix, nothing. Possibility of even going short if the market stays weak. Amazon, same scenario. Worst or best case scenario is that it's kind of a wedge formation, which still means it's moving sideways. You probably don't want to be in it. Roku, nothing. It's still above the T-line. Stochastic's heading down. You had the bearish Harami gap down. It's nothing intriguing at this point. And you've got a doji sitting right smack dab on the T-line. Oh, Netflix has earnings tomorrow? Okay. So in that case, you watch what it does going into the close. If it's very positive, you got to figure that people that know what's going on with a company and have analyzed it and are much closer to what's going on with it, if they're buying going into the close, if you happen to be long, you stay long. If it's an indecisive day or even a bearish day and you're long, you got to figure the people that know what's going on are getting out. You close it out and wait to see what the results are. So Roku, very simple. If you're long, it has to open positive and trade positive. If it opens lower, you close it out immediately. Tesla. Observe the obvious. Which way is this one moving? Nowhere right now. You're back below the T-line. You should, if you were long, you would have closed it out today, because what direction is this trend going? Absolutely sideways. You don't have anything in your favor telling you which direction the probability, or you don't have any probabilities going in your favor. NVIDIA, same scenario. If you happen to have held on to it, that's not what I want to do. That may not even be what I wanted to do. That's what I wanted to do. If you happen to have held on to it on Friday, it had to open positive and trade positive to continue this uptrend. Today would have closed it out. Now, does that mean you have to stay out of it on any of these big ones? No. If the market all of a sudden turns around and for some reason Pelosi and what's his name get together and the market's up 600 points, now you watch these charts and see which ones are producing the better charts to get back in. And Apple, same scenario. Which direction is this one moving right now? Nothing that I'd be real intrigued with. So I would have, not Munchkin, dang, I keep having a hard time saying his name. But anyways, right now the biggies are not doing anything with any great relevance. But there are stocks that are showing signs. And this is, again, the benefit of being able to scan very quickly. Well, yeah, the fact that a lot of these stocks are up in the overbought area and now rolling over and below the T-line just says, let's go find a better probability setup. So there's going to be times when the biggies are good buys. They're all moving in the right direction. And there's times where the biggies all of a sudden turn sour and you have to go find something else. But that doesn't mean they're not going to come back in a week, 2 weeks, 3 weeks. So where was I? This one has relevancy to it in a couple. Mnuchin, there you go. Thank you, Gail. And I won't remember it the next time I have to say it. Talking heads have said it will be a sell the market scenario if there's a deal struck. For us, we watch the candlestick story. That's exactly right. So here's a relevant chart. Why? Because they had kind of a doji gap up, best friend. A trend kicker signal. So what's that telling us in this whole scenario right here? They're trying to get back into this one with great enthusiasm. So if we can identify a chart where the signals are telling they're buying with great enthusiasm, that's the type of chart we want to be in. APT, change the direction with a best friend signal, gap up through the T-line and the 50. Another one that should be watched. Now, it gave up some today, but it's still a buy signal. It wasn't like they turned it into a negative signal. What's this tell us? If they open this positive and start trading positive, the signal is still in effect. Dave & Buster's, same scenario. Doji gap up through the moving averages. Where's your next likely target? Up in this area. That's a good 20% move. So the ones that you can identify the patterns, like a J-hook, or like a J-hook that bounced up off the T-line /50, that's been using the 50 as support, what's that visually tell us? This is exactly where everybody's buying. It gapped up, wave 1, starting wave, or pulled back wave 2, starting wave 3. Where's wave 3 likely to move to? If this is wave 1, wave 3 will be up here somewhere. Let's say just kind of at where it topped out before. So we can get much better visual calculation based upon the pattern. What do we got going on here? Here's your classic fry pan bottom J-hook pattern. What adds relevancy to the analysis is, look where the J-hook pattern was supporting, right on the T-line, bouncing up off the 50, and now we're just about at this breakout level. Gives us a lot better, playing field to tell us when we want to be buying. If it opens positive and starts trading up through this level, what's it telling us? Our J-hook pattern is in progress. OSB, if this opens positive tomorrow, what do we got going on? Our J-hook pattern that's more defined, a bobble breakout, which is usually a very high probability trade setup. DQ, a good option trade. Fry pan bottom, left-right combo, right smack dab on the T-line. AER, not quite a bobble breakout, but close. J-hook pattern with a doji sandwich. Definitely would be a buyer on positive trading on this one tomorrow. These recognizing the patterns give us, again, high probability of the direction and the magnitude, and more than likely will act better even if the market all of a sudden turns on you. Another fry pan bottom, classic bullish engulfing, another high probability trade setup. So we just put ourselves at a little bit of, not a little bit, but a major advantage when we can see breakout type situations that tell us the bulls are in control, and we can visually recognize it based upon where they took control, what they used as support, where was the breakout level. So there's our bullish left-right combo. There's our trend kicker. That's a pretty good indication that Cheesecake Factory, if it opens positive tomorrow, has a lot more upside to it. ADTN, there's our J-hook bobble breakout with a trend kicker signal off the T-line, also implying there's a lot more upside. If we can identify a sector, like the wheat stocks, Krone, acting well, S or CGC, Canopy, J-hook pattern, and I bought some TLRY calls today. Because what do we got going on here? Kind of a bobble breakout. Where do you think the next likely target is if they've broken through the 50? Good prospect of coming up to the 200. And here's a very easy entry. Look how it's supported right here on the 50. Big basing area. Indecision, indecision, indecision. Kind of a wedge formation. And then they gap it up and do a doji. Very powerful. Well, they gapped it up. Indecisive when they got there. But what do we know about the T-line? What do we know about the doji rule? If it opens positive, you probably want to be buying this one immediately. Specific reason you took, because I did the calls on it, Nancy, and both of them looked good. I just felt I had a little bit better leverage buying this one versus CGC. Either one of them would have been good. I was looking at both of them, trying to figure out what my percentage moves would be. And I was getting a little bit better leverage out of TLRY. All right, so when we're looking at a market that looks like this, waffling maybe, there's still lots of good bullish charts. But what else should we be considering? We don't know which way this market's going. So this is a market condition where you want to have both long and short positions in the portfolio. So something like this can be shorted because kind of got a breakdown through this little support level. Also had a resistance here at the 50. What's that imply? Lots of room left in the downside for your stochastics. A good probability short situation. Overstock. kind of a dumpling top, failure at the 50. Where are we? We're still below the T-line. And what hasn't happened yet? It hasn't had a big downdraft yet. So this one looks like a good one to go short because it hasn't really moved. It's just kind of setting up to be start selling off. Facebook, same scenario, just below the T-line. If the markets open up weak tomorrow and everything's selling off, another one that has a high probability of moving lower. ADP, left-right combo right here at the T-line, closed just below the 50. Another one that has a high probability if it opens lower. If the Dow Jones does, in the fact that last week's high was lower than September high, figure into it at all, or just the last few days of candlesticks? Pretty much just the last few days, but it does indicate that instead of it anticipating that we were heading for this level, and it failed with the bearish Harami selling, now what's it tell us about our uptrend? It's probably not very strong, and we might now be in something that would be considered more of a wedge type formation, which means we don't really have a pattern, but the fact that they couldn't get up here before seeing selling shows you the sellers are in control, especially with the close back below the T-line. So tomorrow, I will probably add one or two short positions if the market opens lower. So here's run. Ever since it failed up here, you can stay short if you're short. Where are you looking for the first support level? See what it does right here at the 50. Now I say if the market's open lower, it's still staying up about 142 points right now. But again, that's meaningless because we may wake up tomorrow and the pre-market futures are showing the market's going to open down 120 points. AEL, Doji gap down. This is another trading strategy that if you see that type of thing, that gap down usually implies it's going to keep drifting lower. So another method, using the bearish doji, bearish best friend, to start going short. So you see that type of thing when you have a strong sell signal. Look at our bearish engulfing signal. So this is why you want to use everything you can see visually on this chart to tell you which way to be going. First of all, you have a bearish engulfing signal in the overbought area. Now that's pretty decent. Now you can add the fact that they started selling at the same level over here. So what do you got going on? Probably a double top. Didn't confirm yet because they haven't closed below the T-line. We could still be doing this. But the fact that they opened it lower, again, our doji rule, telling us they're going to trade lower, told us two things. One, we could probably be setting up for a bearish doji sandwich, which would be a pretty good indication they're going to stay below the T-line. That's when you have a high probability entry of shorting. Because of all this information, you can see at an instantaneous glance, failed at the same level it failed before, had a bearish doji sandwich, closing below the T-line. What is our implication on a bearish doji sandwich? There's going to be more downside. Flux. What was the alert to start looking for a sell signal? If you see a gap up in the overbought condition, start looking for a sell signal. If you see a gap up in the overbought condition and you're that far away from the T-line, definitely look for a sell signal. Sell signal, hanging man, confirmed. you definitely would have been out of this position. Probably would have been out of this position right here. Very simple stop loss procedures in candlestick analysis. If you're in the overbought area and they're gapping it up, where's the best place to put a stop? At the open of that last candle, or at the open of that last candle on this day, because logic says if you're in the overbought area that far away from the T-line and they're trading back below the open, the sellers have started to take control, close out the position. LMPX. Kind of the same scenario on this one. Where do most people buy? They buy exuberantly at the top. As we did in our training this weekend, if they gap up in the overbought condition, what do you start looking for? Selling. If they gap up and they're trading up here, what is our alert to start taking profits? Look how far away you are from the T-line. So what is the strategy? You flip to your 10-minute chart, and if you start seeing sell signals and trading back below the T-line on the 10-minute chart, you start taking profits. Why does the 10-minute chart become that much more relevant? Because our daily chart says we're way too far away from the T-line. Get ready to start looking for taking profits. Could you manage that trade using stochastics on Flux? Oh yeah, you don't have to manage the trade. Remember the top criteria for any trend analysis. The signal itself. That's the whole reason we're here, is to identify the reversal signals that the Japanese rights traders have provided for us. In this case, a hanging man. Now we can start adding the other elements. We're seeing a sell signal away from the T-line, another alert, with stochastics in the overbought area. That's that much more confirmation that this is the area where you want to start considering taking profits. Everything's based upon the probabilities that we see based upon the signals and then the confirming indicators. And once you learn it, it's like riding a bicycle. It becomes very easy. So here's ICPT. Wave 1, wave 2, wave 3 could be the same magnitude as wave 1. You could short this one on weakness. And VIR, kind of your bearish doji sandwich, your evening star signal, your failure at the T-line and the 50. There's probably your first target, but if it breaks that, you could be all the way back down into this area. No, taking profits does not necessarily mean that sell signal or that time to take profits doesn't necessarily mean there's going to be a downtrend. It may just stop the uptrend. What we're looking for are the strong signals telling you the selling pressure is extremely strong. Okay. So we need to see what the pre-market futures are doing 10 minutes before the market opens. If it looks like they're going to be trading up, yeah, obviously we're going to start looking at some long positions. If it looks like it came up, hit the T-line, and when we wake up tomorrow, the markets are going to open down 80 points, we're going to be looking at the charts that have a lot of weakness to them to start going short. So the first step that we do on any given trading day, whether you're day trading, a swing trader, and even a long-term investor, is what is the market going to do today? Is it going to confirm the direction we expect it to go in, up, down, or sideways? That's where we make our first decisions. So when I put out the recommendations at night, if there's 3 longs and 1 short, it's probably because the bias is that it still looks like the market is heading up. If it's 3 shorts and 1 long, obviously we think the bias is heading down. If it's 3 longs, it's probably a pretty convincing reason to think that the market is heading up with a lot more surety. If you see 2 longs and 2 shorts, means we'll probably want to see what this sideways market is going to do on the open. Everything that you can put into your analysis with candlestick signals is just pure common sense. There's no tricky formulas or any tricky analytical factors you have to look at. It's just all common sense put into a graphic depiction. So with that, is there any general questions on candlesticks? General questions, Magic. OSUR looked great pre-market and early and regular hours as kicker. Would it have been to trade this with a 10-minute chart? No, that's not a general question, but you can't tell. Yes. But the answer is yes. If you see it opening positive, then I flip to a 10-minute chart, and you can see what happened. After a few minutes, you started seeing selling. So when you saw your first sell signal, a bearish engulfing signal, setting up on the 10-minute chart, and let's say I bought right in here, seeing that it was moving up. Even if it's trading right here on the 10-minute chart, I may flip down to my 5-minute chart. And the 5-minute chart, still moving positive, still moving positive. And then you start seeing sell signals, or selling, which corresponds with the 10-minute chart selling. Where do you think the price is going to move to on your 10-minute chart? Back to the T-line. Same scenario on the 5-minute chart. If it's moving back to the T-line, what do you want to do? Just close it out and then wait to see what it does there. Do you ever consider volume? No. Now, volume is already built into our scans. We're only looking at charts that trade, in my case, more than 200,000 shares a day on average. So I don't care about volume. Now, the only time volume comes into play, I don't have volume on this chart, but if I see a big reversal, and on the day before, the day of, or the day after, there was a big volume spike, then you can pretty much assume that there's been a major change of investor sentiment at those levels, or investor ownership at those levels. And what that usually means is, if it's at the bottom, all the panicked sellers have sold into the smart money. Now, I know it's smart money because being the worst investor in the world before candlesticks came along, when I could look at a chart and say, man, how come when I sold down here, as soon as I sold, it started going up? How can that be? Well, the logical answer is I was the panic seller selling into the smart money who was buying at the bottom. Now, what that does or did for me was said, well, if I'm stupid and I'm selling at the wrong time, then I just need to turn my perspective around 180 degrees, and I want to start looking for the buy signals in the oversold area, because that tells me where the smart money is buying. So, Mike, that was a long answer to say volume does not make a difference. We're not buying volume, we're buying price. Daniel, if I'm recommending 2 shorts or 2 longs at night, and the pre-market or the market is showing the Dow is going to open down 140 points, I'm probably disregarding the longs and I'm going to look at the short positions. Conversely, if the pre-market futures are showing the Dow is going to open up 140 points, I'm probably disregarding the short positions and looking at the long positions. Then why do some of your daily stock picks for the day are under? I don't know if they are. Very rarely will I make a recommendation where the stock or that it's below 100 or 200,000. So if there has been those, it's been by accident. But usually right before I put the final picks up, I've probably narrowed down my, or doing my cultivation process. I might have 8 good stocks. I might have found 25 that day. Then we go through the cultivation process and narrow it down to 8. And then on that list of 8, I'll pick out 3 that I think are the best. They may be best friend signals. They may be fry pan bottom breakouts, things that put them in a little bit more in favor of having a good, strong price move. But then right before I click on it, I say, oops, wait a minute. This best friend signal had a big day, and it was only 140,000 shares. Let's scratch that. So I will usually eliminate that process of or that factor that if it's a low volume, I'm probably moving on to something else. I am reading your book, and kicker signal is with no shadows, but sometimes there are some. With a kicker, can you have shadows? Yes, you can have shadows. I can't remember. But you prefer not to have a shadow. If it's a kicker signal, I don't see one on here. But if you have a kicker signal, if it opened here and closed here, you want to see it open and go immediately the opposite direction. If it opened here and then had a little shadow, which is usually your initial profit taking, and then took off, you still have the same thing. What you don't want to see is for a kicker signal, if it opens here, trades all the way down here, and then comes back up through, that's not a real kicker signal. Now, it still may be a good bullish signal, but it's not one of your strong kicker signals. I recently joined a couple years ago, and there is a Word doc with 2,000 TC scans. Is that or something still available? Mike, that should be available. Number one, if you look at the little file way down in the right-hand corner of this page, there might be the formulas for the TC2000 scans in there. If not, on our website, in the blue column to the left, if you scroll down near the bottom, it should say TC2000 scans, and you can get the formulas off of there. Paul, yes, the futures are up, but remember, they don't mean anything right now. Because we could wake up tomorrow and it's down here. So the futures don't mean anything until about 10 minutes prior to the market open. Do you trade leverage ETFs, for example, the Qs? Yes. Or the triple Qs? Yes. I'll trade the YMs. I'll trade the I'll trade LABU, which is the triple leverage ETF. So if I see something if I see a sector, if I see Labu is got a good chart to it, I can either trade Labu, which is triple leveraged, or I can go to the biotech sector real quick and then run down through the stocks that are in that sector to see if any of those individual stocks have a good chart to it. If there's decent charts, I'll probably go back to trade the Labu because, again, it's leveraged. Let's see. Dow Jones, Standard & Poor's, NASDAQ at the opening. What combination of these cause you to go long or short? Very simple. If we wake up and the Dow futures are up 140, more than likely the NASDAQ will be up and the S&P will be up. Now, if the Dow is up 60 and the NASDAQ is down 20 and the S&P is down 4, that pretty much tells us there's not really any major change of the current direction. It's just the index is waffling. But more than likely, if you see the Dow, which is usually the most quoted and most publicized index futures, if they're up 140 points, you can pretty much assume that the other indexes are probably trading up also. We haven't done the double line yet, no. Justin, hold on to that one. Okay, I guess, Jim, go ahead and do the double line. So ADSK, what is the question? You remember, you want to have a question on your will it form a handle from here? Will it form a handle? No. It's a fry pan bottom, which means what's our expectation from here? If it opens positive, we've got a fry pan bottom breakout. What do we expect from a fry pan bottom breakout? A strong price move. So that's right there at the breakout level. If either stock trades to the downside tomorrow, which put trade would you pick? No, on either one of these? Why? Well, that one's just trading lower. Probably this one because you've got more force. You've actually closed below the T-line with a bearish engulfing signal with a booster. There's the booster, kind of pushing it in that direction. Whereas this one, it's a good short, but the other one's stronger. OPK, yes, you can go long because you can see the fry pan bottom J-hook pattern with the added confirmation that it bottomed or supported at the 50-day moving average. I can't do this. IEA, put a safety stop loss at yesterday's close. I would probably do it. Yeah, you could do it at yesterday's close, or if it opens positive, starts trading positive at, or even, probably could even do it at today's open, because if it comes down through there in this overbought area, that's where the selling has started. But yesterday's close also is a little bit more conservative. NVO, I'm guessing, is that a overseas trader? There's nothing there on that chart that it's having a hard time even getting up through the T line right now. XRT, That one, if it opens lower tomorrow and I was long, I'd close it out. You can see how it's getting a lot of selling up here. Costco. Dark cloud, bearish left-right combo. If it opens lower tomorrow, close it out. Now, there were some retailers that were acting well. I was going to say Dillard's. Dillard's was doing a J-hook pattern earlier. Weakening with a gap down and overbought. Yeah, Costco. Yeah, if it opens lower tomorrow, you're out of it, or you can think about going short. Oh, pshaw. Home, all you can do here is stay long as it stays above the T line. So you can see that it's kind of topping out, but it hasn't done a sell signal other than selling after a doji, but you're still above the T line. So I'd have a safety stop just below the T line. And BLK. That's the bigger the signal, the more compelling. And what was the alert? Look at the gap up in the overbought condition. That would be another one where when it opened positive, I would have set my stop at the previous day's open. Because if it came back down through there, where do you think it was heading? Back to test the T line. INO, you can go short on this one. Dumpling top, left or bearish engulfing, failure at the T line. You can short this one. American Airlines, nothing. Absolutely nothing, just going sideways. And ALSN, no, remember where a dark cloud has to open, Kate. Dark cloud has to open above any of the previous days trading. So this is just a down day and an uptrend. It's still closed above the T line. If it opens lower tomorrow, you could close it out with the anticipation it's coming back to test the T line. Then you see about buying it back at that point. Marriott, you can short this one. Oops, you had that one, all right. And GSX, that one you can short, but you'd have to be a little bit more attentive to what it does if it comes back to the 50. But that's a big bearish left-right combo. Just if you're shorting it, just watch to see what happens at the 50. LLNW. Yeah. That's a technical analysis to say I probably wouldn't be long or short this one. There's nothing on that chart that gives you a real good indication which way they're going. And Goodyear, you can stay long, but you can see where you are. You're right back here at this level. You might go flat, so definitely have your safety stock. Yeah, safety stock. Safety stop just below the T line. OBCI. That's a little gap up. Make sure your volume is good, but that's a good breakout. And MOX. You better make sure the volume is hefty on this. You can be buying it, but I just watched to see what happens. It's kind of a scoop. You still want to watch to see what happens once it gets to the 50-day moving average. Blink, yes. First of all, it closed below the T line. Secondly, it never really confirmed the Morningstar signal, because you had a Morningstar signal bouncing off the 50, closing above the T line. What do you need for confirmation? Bullish trading. It opened here and traded here. Where was it as far as the T line? It didn't execute. That day, you still wanted to see it trade above the T line or stay above the T line. It didn't. if you bought it on this day and it closed back here, your stop would have been right here because it needed to open positive and trade positive. So yes, close that trade. Apple is kind of is that Apple? How did I hit lows? That's just a fine howdy do. Apple, nothing there on the long side. Probably wouldn't be short because you got support levels in here, but I would have closed out any long positions today. How do you decide when it is too late to enter a stock with a 45-degree trend up? Because what you want to do, anytime you decide whether you want to be buying this or not, get rid of that, is going back and saying, where should I have been buying this? You're in an overbought condition. You're in a stock that's gone from 175 to 275. So you look at it and you say to yourself, that's the type I'd like to be in, but is this the best place to be buying it? And obviously the answer is no. It's already moved up 80%. So what do you do to decide when you should have been buying this one? Just learn that when you see a breakout like that, look at our little slow curve. Now you can see that as long as it stays above the T-line, you're in a 45-degree and you can stay with it until you see a sell signal and a close below the T-line. This one, you're in a fry pan bottom. Now, remember, when you buy a buy signal, it's usually when you're in the oversold area. When you buy a pattern, it's usually when you're in the overbought area. So you're right now up here in this gap area. You still have a fry pan bottom. If you're long, you can stay long. So what was the analysis on this one? Look where our doji sandwich occurred after this initial breakout. What did that doji sandwich tell us? There's more upside. What did it tell us about the 50? The 50 is not acting as a resistance. What's it telling us about the pattern? It's setting up a fry pan bottom. So if you're looking at hindsight, then where should I have bought this? Probably somewhere right in here. Now you decide, if I'm buying here, what do I need to see? I need to see the breakout. If I do a bearish engulfing signal, what's that tell me about the breakout? It didn't work. I should be back out of that trade. AMD is a nothing chart. You can see that it's kind of in a wedge formation. I wouldn't be long or short this one because of the trajectory. You can see that the trajectory is going nowhere. And PEN, another one that tells you you're not really going in any direction. If you had been long, today you would have closed it out. Not only because it closed below the T-line, but also you can see what direction it's going. It's going sideways. So you've got a stock that's trading below the T-line going sideways. There's no reason to be, is this going down, way down? I don't know whether it be way down. My projection would be that it's probably coming back to this level, which kind of coincides with the 50-day moving average. Maxar, you're kind of at the breakout level, yes. You can stay long on this little J-hook pattern. Now, what's this little J-hook pattern tell you as far as additional information? Well, if this is wave 1, wave 3 should be up here. If wave 3 is up here, what's that tell you about this little resistance level? It's not acting as resistance. Beyond Meat, I wouldn't be long or short. Look at your bearish left-right combo. This is why you want to know your signals and patterns and your top rank signals and patterns. Anytime I see a bearish left-right combo in the overbought condition, I don't need confirmation. The probabilities are so great that there's going to be a reversal move that if I was long, I would have closed it right here. Now, we don't have an uptrend, but we don't have a strong downtrend, which means I wouldn't be long or short. You could go short. If I was going to short this, I would probably put a sell stop just below today's low. If there's enough strength to bring it down through there, they're bringing it back somewhere. Now, a lot of people ask, where would be the targets? Do you use Fibonacci numbers? Do you use Bollinger Bands? You can put whatever you want to on. Oh, I can do it over here. If I put on Fibonacci retracement numbers, well, could move here, here, or here, or here, or here. Now, do I put this on to see what to do? No, I put this on to see if I see a buy signal at one of these levels, then I know that's where they're buying. The people that trade Fibonacci are buying at that level. AEP is a J-hook pattern. There's your classic fry pan bottom J-hook pattern, little bullish engulfing right here off the T-line. You can still be buying this one on positive trading because what would you have? You'd have a doji sandwich, J-hook pattern confirmation. ZS, whoops. Boy, all you can do here is stay long as it stays above the T-line. And ZM, all you can do here is stay long with a safety stop either at today's low or at yesterday's close. UCOM, getting a little bit toppy. Shooting star after it gapped up. Now you've got a bearish engulfing. Definitely put your stop below the T-line. And Twillo, get ready to take profits. Again, gap up, bearish engulfing. I'd get ready to take some profits up here on weakness. And TCON, probably wouldn't be long or short this one. That's a sideways moving chart. Intel, this is just a boring stock to trade. Boy, if you like it in your long, I wouldn't be buying it. You have a long-legged doji, but I would put a safety stop just below the T-line. And where is it going? Maybe to the 50. Could be, not that far away, but I wouldn't be shorting it, and I wouldn't be long right now. ZI, that's a J-hook pattern setup. Very obvious that it's doing it right on the T-line. BNTX, yes, kind of a J-hook pattern, except you had a bearish day today, so you still use the T-line as your ultimate stop. NTAP, stay long. Overbought area, put your safety stop at today's low. Caterpillar, stay long, except you've had a gap up. I'd have a safety stop right in here. If it comes down through that direction, what was your alert? That gap up in the overbought area. What's your other alert? J-hook pattern. Wave 1 and wave 3 look pretty much the same right now, giving you a little bit more indication that it's probably time to start taking profits. Blair, I used to know jokes galore. I just guess I'm getting old. Oh, we did Caterpillar. That's what we were looking at. Yeah, I got to find some new jokes. OPK, well, that's more of a J-hook pattern, whereas Tupperware started back up but then close back below the T-line. And what's our T-line rule? If it closes below the T-line, the probabilities are much greater that you're heading lower. You made money, Jace? All right. Where do you want to put your stop on this one? Right, today's low. Not quite a hanging man, but it's using the 3T line as support. But they bring it back down below today's low, the selling has started. You know, if ZI is related to AM, oh, I don't know. Fat fingers. Is ZI? What is ZI? Oh, must be something to do. Oh, yeah, something to do with Zoom. Okay. Spin off. All right. All right. Yeah, you see now the futures are only up 98. They were up 140 a while ago. So right now you can just make one assumption. If we're below the T-line, we're probably in a downtrend. However, the nature of this market is kind of whipsawy, and it's mostly coming from the tweets that come out of Washington. We're still a slow uptrend. You can stay long on this one. Is it in the J-hook setup? Not really J-hook. It's in the J-hook type mode, but more that it's staying above the T-line is what your analysis should be. Can the small body red candle be considered as a doji? If so, do we have a doji sandwich? Well, I guess, yeah, you could. But that would just still imply that this is an uptrend above the T-line. How do you make your $1 million in the market? That's right. Start with $2 million. OPK is reporting next week. Does that affect your analysis today? No. When it affects my analysis will be on the day that they're going to report earnings. So if it's Thursday afternoon, I watch to see what it does going into the close on Thursday. If it looks a little bit timid, I'll close it out. If it looks strong, that means everybody's expecting a lot of good stuff. All right, everybody. We'll see how this market opens tomorrow. Be ready to put some shorts on if this market opens weaker. Because, again, even though the futures are trading positive right now, oops, they're trading weaker yet. They're only up 83. So with that, everybody have a good evening. We'll see you bright and early in the morning. We'll see you then.